What's up everybody? Ex-dividend investor here. In this fun video I review the results of a dividend investor test that I recently created and then shared on social media. So if you appreciate stuff like this, then please hit the thumbs up button, subscribe if you haven't yet, and click that bell notification. Now if you've not taken the dividend investor test yet, then I highly recommend that you pause this and take it and then come back and continue watching this video. I put a link to the test in the description of this video as well as in the pinned comment. It's totally anonymous and is only 30 questions, and is a fun way for you to gauge some of your knowledge about dividend investing. And don't worry if you score poorly, because imagine how much worse you would have scored if you had taken this test before you started learning about dividends. In fact, some of you scored better than I would have scored had someone else put this test together, because I would have gotten a 29 out of 30. And in fact, it is question 29 that I would have missed, and that question has multiple new things I learned, which I'm excited to share. A subscriber of mine named Inferio noticed that the screenshot I shared might have an issue with it. When I dug into what he said, I found out that the test still had the correct answer, though what he called out did make the question harder than I originally intended. So I removed the row of data which would cause even more people to get it wrong, and I'll show you what I mean in a moment. Now let's go over the results. For reference, I said that if you scored less than 15, then you're probably just starting the journey of dividend investing. If you scored between 16 to 24, then you're versed in dividend investing. If you scored between 25 to 28, then you're well versed in dividend investing. And if you scored 29 or 30, then you should be creating these tests yourself. Okay, so far 424 people have taken the test, and more are taking it every day. I'll go over each question and show how people did, and then at the end I'll go over a summary of average and median scores. So question number 1, how do you calculate dividend yield? And we see that 96.9% of the people got the right score. And that's where you divide annual dividends per share by current stock price. If you missed this for some reason, then I'd recommend that you spend some time to really understand this concept, because it's pretty important to understand as a dividend investor. Okay, and question number 2, what is the dividend yield of a stock that pays out $1 a month per share and costs $100? So this one kind of builds off the previous question. So if it pays $1 a month, that means it pays $12 a year, and 12 divided by 100 means 12%. And so we see that 76.9% of you got that right. Question number 3. If a stock has a dividend yield of 20%, is that normally considered safe and reasonable? And we see that 99.1% of the people got it correct and said no. Question number 4. Which sector has higher yielding dividend stocks on average? And we see that 98.1% of the people got it correct and said utilities instead of technology. Question 5, what does CAGR stand for? And we see that 95.3% of you got it correct at compound annual growth rate. And we see that a few people got tricked by the compound actual growth rate. Question number 6. If a dividend has a 5-year CAGR of 10% and you assume it will continue to grow at the same rate, and it pays $1 per share per quarter right now, how much will it pay per share per quarter next year? So if it pays $1 per share per quarter and you're looking at 10% more, then that would be $1.10, and 86.8% of you got it correct. Question 7. Can a stock have a negative 5-year dividend CAGR? Here we see that 89.9% of you got it correct because the answer is yes. The way that can happen is if a company cuts their dividend, that means their compound annual growth rate on the dividend has decreased over the time frame in question. And theoretically it could go to 0 if they keep decreasing it, which is probably unlikely. Question 8. If a stock pays out 25 cents per share per quarter and does a 10% dividend hike, how much would it pay out per share over the upcoming year? So 25 cents per share per quarter, there's 4 quarters, so that's $1 a year. Does a 10% dividend hike, so that's $1.10. And we see that 65% of you got it correct. So I think that tricked people a little bit because they looked at the 25 cents per share per quarter and didn't read this carefully, where it said over the upcoming year, so they took 10% more than 25 cents and got the 27.5. So that fooled about a third of the people. Question 9, how frequently do most companies in the US that have dividends pay them out? So we see that 93.4% of you got it correct at every 3 months, which is quarterly. And then 6.1% of you mistakenly said every 4 months, which is kind of understandable because that's what people think of when they say quarterly. Okay, question 10. If you buy a stock on its ex-dividend date, do you get the next dividend payment? And we see that 79% of you got it correct and said no. So if you buy it before its ex-dividend date, then you get it. Otherwise, who gets it? Well, that leads to this question. So question 11, if you didn't get the next dividend payment, then who gets it? And 72.6% of you got it correctly when you said the seller. So this is kind of an interesting one to me. 18.4% of you thought the company, and usually when you're buying stock, it's between people. And then this one's really interesting. 5% of you said the broker, and I think that's because sometimes you see titles like Robinhood sent me $10 of dividends or some title like that. So brokers are just the middlemen here. They're not actually owning the stock or anything like that. And then 4% of you said the market, and I'm not sure what that would actually mean. Question 12, what is the dividend payout ratio? And 93.2% of you got it correctly, that it's the percentage of earnings paid out to shareholders via dividends. And then, would a payout ratio above 100% be a good thing for J&J? And 98.6% of you answered correctly, no. Which makes sense based on the previous question, because if you paid more than 100% of your earnings, then that means you'd be taking on debt or doing something like that to pay off the dividend, which obviously wouldn't be good. And then question 14, what does DRIP stand for? And 99.1% of you got it correctly in saying Dividend Reinvestment Plan. Question 15, if you get a qualified dividend in a taxable account and have your DRIP on, will that dividend always be tax-free since you reinvested it? So I asked that question because I've gotten a few people asking me that if they have their DRIP turned on and they don't actually get the dividend in cash, will they be taxed on it? And so 84% of you got it correctly that the answer is no. Basically, when you get a dividend in a taxable account, that counts as taxable income. And some folks outside the US said they had a harder time on this one since it was kind of tied to taxes. Question 16. Are dividends received in your retirement account count as part of your annual contribution limit? And 90.6% of you answered correctly and said no. So this is another question I've gotten a few times, which is, let's say your dividends are generating $1,000 of cash. Does that go towards part of your annual max contribution limit? And the answer is no. And then question 7, what does REIT stand for? And we see that 97.9% of you got it correct at Real Estate Investment Trust. We see a few people guessed Real Equity Investment Trust. Question 18, what does AFFO stand for? And we see that 86.8% of you got it correct at Adjusted Funds from Operations. Question 19, what is AFFO used for? And we see that 79.5% of you got it correct as a financial measure used to estimate the value of a REIT. Question 20, what does BDC stand for? And we see that 91.3% of you got it correct, and that's Business Development Company. A few people have asked me to do a video on BDC, so maybe I'll do that in the future. Question 21, what percent of taxable income for a REIT must be paid out in the form of dividends each year? And we see that 85.8% of you got it correct at 90%. Question 22, what is the biggest difference between ordinary and qualified dividends? And the correct answer is the tax rate, and 96.5% of you got that correct. Question 23, how do you calculate yield on cost? And the answer is divide your current dividends per share per year by your cost basis per share. And 71.2% of you got that one correctly. So enough people got it wrong that I would say it'd be a good one to kind of dig into it if you got it wrong. Question 24, if stock price drops by 50%, how much do your dividends paid out from that company also automatically drop by? And 95.8% of you answered correctly at 0%. And this is actually a common one that people don't understand, so I'm glad that many people got it. And question 25, for a company like J&J, would you generally prefer to see shares outstanding increasing or decreasing? And 94.1% of you got that correct at decreasing. So that kind of makes sense. So the shares outstanding represent pieces almost of the company. So if there are less pieces out there, because a company is doing share buybacks, then shares outstanding is decreasing, which means that without you doing anything, your shares are becoming more valuable because they represent a greater portion of the company. So there's basically two ways that companies can directly return value to shareholders, and one is doing share buybacks and the other is dividends. And then indirectly, if stock appreciation goes up, then that's another way we get value. And then question 26, what is an ADR? And we see that 50.7% of you got that one correct, and it's a way to invest in a foreign company stock. And we can see it says ADRs offer US investors a way to purchase stock in overseas companies that would not otherwise be available. So if you'd watch all my videos, you'd know that I bought BTI, and that was actually an ADR because it's a British-based company. Question 27, how many consecutive years of dividend increases do aristocrats have? And 84.4% of you answered correctly at 25 years. Question 28, how many consecutive years of dividend increases do kings have? And 85.8% of you answered correctly at 50 years. So this is an interesting one, and the company in question is Best Buy. And I came across this when I was doing a video I did recently called Cheap Dividend Stocks. And what it says is, as you can see in the image below, a company had 3 payment dates in 2019, i.e. on 4/10, 7/5, and 10/10. But you can see that in all other years listed, they had 4 payment dates, i.e. in 2017, 2018, 2020, and 2021. Does this company count as having increased their dividend consecutively each year? 72.6% of you answered correctly yes, but let's look at it a bit. So normally when I think of has a company consecutively increased their dividend, I just added up the 4 payment dates. If it's a quarterly company, that's kind of how I always figured it. So I'd look at the calendar year and I'd see how much was paid out. And then if each subsequent year was higher than the previous year, then it would count as a consecutively increased dividend. But that's not actually correct. So this is what made this one kind of tricky. There were only 3 payout dates in 2019. But if you actually look at the X date, which tells you if you're eligible for the dividend, we see that there were 4 dates in 2019, so 3, 6, 9, and 12. This December one wasn't paid out in 2019, it was paid out in 2020. So in this case, 2019 only had 3 payouts, and so for the calendar year, they actually only paid out $1.50 worth of dividends. And then if we look down a little bit, we can actually see here between these other years that if you only looked at calendar year, then you'd actually be getting less dividends in 2019 than 2018. However, because you're eligible to receive it, just because you received it on January 7th of the following year, it still counts as part of the previous year's consecutive years of increasing dividends. So that one was something that I learned because I was always thinking of the pay date instead of the X date. So what that subscriber was calling out that was actually making it even trickier was this special dividend in 2016. Because if you look at 2015, you can see it paid out 23 cents each quarter. And then in 2016, there was a special dividend, and then they paid out, again, 4 times. And so the first question is, well, what do special dividends count as part of the consecutive years of increasing dividends? And to answer that, I had to go to S&P Global's actual methodology they use. They said cash dividend payments declared as special by the paying company, including recurring special cash dividends, are not considered. So this is the document that they use to gauge dividend aristocrats. So that even made this trickier because if you look at it, it looks like they paid out more in 2016, and in fact they did, but one of those payments was a special dividend which isn't counted when you're looking at consecutive years of dividend increases. So I learned a couple things on this one. One, I learned about how special dividends are considered in the methodology. And 2, I learned that I really need to just be looking at the X date and not the payment date. And while I intuitively knew that, I still had just gotten into the practice of looking at the payment dates because that kind of made sense. And the odds of something, just hitting the very end of the year or the beginning of the year is pretty rare, so it hardly comes into play. Okay, and then we come to the last question, question 30. If a stock splits 2 for 1, what happens to the dividend? And 75.7% of you answered correctly that the dividends per share amount becomes 50% of what it was. So think about that. Let's say that J&J splits 2 for 1, and let's say you own 100 shares of J&J. So that means you'd end up with 200 shares of J&J. And let's say if before J&J paid out $1 per dividend per share, that means you'd be getting $100 of dividends per year. But now you have 200 shares, and if they keep the dividends the same, then you'd end up suddenly doubling your dividend payment, and that's not what happens. So in the 2-for-1, then they changed the dividends per share to be 50% of what it was. But that's not considered a cut because you have twice as many shares, which is also why when you do a split, it's really not adding or destroying value. But there often is a tendency for more people to get interested in buying because it suddenly looks cheaper even though nothing has really changed. So that was also kind of a tricky one that about 75% of you got it correct. Okay, now let's see a summary of the overall scores. We see that the average score is 25.92 correct, and the median is 27, and the range is from 10 to 30. So here you can see about 30 people said they got perfect score, and 63 got 29, 55 people got 28, etc. All the way down here, 4 people had 16 right, there's a few, 15, 14, 13, etc., and the low was 10. Okay, fun stuff. Now I'd like to shout out my latest Patreons who have signed up since my last video. So first thank you goes out to RJ Wolf, who just signed back up as a Patreon aristocrat. And thank you James M for signing up as an aristocrat. Aristocrats gain access to my dividend portfolio tracker spreadsheet, which I use in lots of my videos, and they get special access to various private channels on my dividend Discord, including one which lets you watch my videos before I release them publicly on YouTube, as well as lets you vote on which thumbnails I should use. And a special thank you goes out to I. Smith for signing back up as a Patreon king. Kings get everything aristocrats get, as well as get to have a 30-minute private one-on-one voice chat with me. Finally, I urge everyone to join my free dividend Discord chat server, which has thousands of dividend investors on it from around the world. Please hit the thumbs up button, subscribe if you haven't yet, and click that bell notification. Thanks for watching, stay positive, and I'll talk to you again real soon. I am not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.